Mickey, you're up. Why don't you tell us a little bit about you and what opportunities you see?
Awesome. Thanks, Doug. I appreciate the opportunity to be on the webinar and appreciate the people that have joined, taken some time this morning to join. As Doug said, my name is Mickey Parker. My company is Pension Transfer Advisors. I'm also located in the Kansas City area, but I have clients nationwide, coast to coast. I am a CPA. I've worked as a controller, CFO in multiple industries over the years, always for privately held companies, working for and with entrepreneurs, and that's ranged from startups to millions in revenue. About 9 years ago, I was involved in identifying and actually researching a company to buy. I found a financial services company, ended up helping a group of investors purchase that company. And then those investors came to me and said, we'd like for you to run that company for us. And that's how I became a part of Pension Transfer Advisors. Pension Transfer Advisors was that business that got purchased. Pension Transfer Advisors been in business about 16 years. And like I said, I've been running it for about 9. As you consider the idea of buying a business, one of the considerations is where do I get the money to buy that business? Jason just talked about the lending programs that are available through the SBA. But whether you use conventional loans or SBA loans, a lender's going to require you to put some of your own money into that purchase. They want you to have skin in the game, so to speak. So where is that money gonna come from? What I found from my clients through the years is that a great majority of their wealth is tied up in their retirement plan accounts, whether it be an IRA or 401k, 403b. What I also find is that most people think that money's untouchable, or if they do touch it, they're gonna have to pay income taxes on it. If they're under 59 and a half, they're gonna have to pay a 10% early withdrawal penalty. But there is a little known provision in the IRS code and ERISA, which governs retirement plans, that allows you to use that retirement plan money to finance the startup or purchase of a new business. That's been given the name over the years called a rollover for business startup. It goes by the acronym of ROBS, or you'll hear it called a ROBS plan. It's a provision that's been used by thousands of small business entrepreneurs over probably a couple of decades. But when I talk to people, most people say they've never heard of it, didn't know they could do that. So I think my message here today is that when you think about where you're going to get that down payment to buy a business, you can at least consider the money that's in your retirement plan to be that source of funds. And the best part is that if you're using your retirement funds, you're investing in your own business. It ultimately is not considered a distribution. It's actually an investment within your plan in the stock of your own company. So that's why you end up not paying taxes and early distribution penalties. About right now is when people are saying, nah, this can't be right. This doesn't sound right. And that's a common reaction. But I can tell you that all of my clients have used this process to start their business. This is strictly what our firm focuses on. And I know, Jason, Doug, Merrill have all had clients who've used this process to get those personal funds needed to buy a business. So certainly is a topic that generates a number of questions. So certainly don't hesitate to use the Q&A to ask anything. Also, questions, I can be contacted at my office if we don't get questions answered here. I'm at 913-274-1930. Website is pensiontransfers.net. So I think that's kind of gives you an overview of it. With that, I'll throw it back to you, Doug.
Well, Mickey, you mentioned the kind of the overall of the program. There's specific issues going on right now with government, what they're offering up, any special situations with accessing those retirement funds?
Yeah, actually, that's a great question. The CARES Act actually includes a provision that allows eligible employees to take a distribution from their 401k plan. Most of the time, if you are currently employed, you don't have the access to those funds. You have to generally terminate employment to do that. But the CARES Act allows an employee to get access to actually up to $100,000, a pretty significant sum. To be eligible, the primary, I guess, criteria to be eligible is that you've experienced some type of an adverse financial consequence, either as a result of being quarantined, furloughed, laid off, work hours reduced. I think one of the options is if you're unable to work due to lack of childcare, that's one of the qualifications to be able to access these funds. So like I say, generally you're not allowed to do it, so that is a special provision. Part of that provision, though, says that you have 3 years to put that money back into a plan so that it's not taxable. And again, that's kind of unheard of, kind of like Jason was talking about. You know, you might have 60 days on a rollover normally. I think they're giving you up to 3 years. And actually putting it into a ROBS plan to start your business meets that qualification. So yeah, that will make that any distribution that you take out that is a coronavirus distribution would not be taxed.
Okay, good. Now, how long does it typically take to go through that process to access the funds for an acquisition?
Just really a couple of weeks, 2 to 3 weeks. The primary, I guess, hold up, a lot of it's just paperwork, so that can be done fairly quickly. The biggest drawback or the biggest slowdown is how quickly a person's existing 401k will process the letter of instruction to move those funds to a ROBS plan. So, but we generally can get them done in a couple of weeks.
Okay. I do have a question here that I think you can answer pretty quickly. Questions: can multiple partners both bring each of their 401k funds to the same new business purchase?
Absolutely. In fact, I had a client 5 or 6 years ago. 3 guys worked at the same place, and they all wanted to go. They actually were going to buy a business. They all walked in and resigned on the same day, put in their termination and their transfer papers, and 3 of them used their retirement fund account totaled about $1.5 million to go buy a business. A couple of years later, they sold that business, and they put a little caveat in there that if that company ever wanted to sell it, they got a right of first refusal. So they came back to me last year and got those same 3 guys with some other partners who were not using their 401k. So not everybody has to. You can have personal funds. I have clients who put in personal savings, personal funds along with 401k. You can do that, husband and wives. So yeah, the answer to that question is absolutely.
Okay. And these are not loans that you have to pay back.
That's correct. It's an equity investment in your business. So no obligation to pay it back. At some point, if you sell your business, that money's going to go back into your retirement plan, the proceeds of that sale.
Very good. Very good. Okay.